The world watched in disbelief as President Trump dropped a bombshell on the global economy on April 2, 2025. His weapon of choice? Tariffs. Not just any tariffs, mind you, but sweeping new levies on imports from almost every corner of the globe. A blanket 10% tariff on all goods, excluding only Canada and Mexico, sent shockwaves through international markets. But that was just the beginning. China, already grappling with existing tariffs, was slapped with an additional 34% on top of the existing 20%. The European Union found itself staring down the barrel of a 20% tariff, while Japan was hit with a hefty 24%. The announcement sent a chill down the spines of investors and economists alike. Trump's protectionist rhetoric had taken a sharp turn towards concrete action, leaving many wondering about the potential fallout. Was this the beginning of a full-blown trade war, with devastating consequences for the global economy? Or was it a calculated gamble, a high-stakes negotiation tactic, aimed at securing better trade deals for the United States? Only time would tell. But one thing was certain, the global economic landscape had been irrevocably altered. The tariffs, announced with characteristic Trumpian fanfare, were met with immediate condemnation from business leaders and economists. They warned of dire consequences, predicting job losses, higher prices for consumers, and a chilling effect on global trade. The tariffs, they argued, were a blunt instrument, a sledgehammer wielded with little regard for the delicate intricacies of the global economy. The reaction from global markets was swift and brutal. The S&P 500, a bellwether for the health of the American economy, plunged by over 3% in futures trading. Across the Pacific, Asian markets mirrored the fear and uncertainty gripping investors worldwide. Japan's Nikkei 225 index, already reeling from a volatile start to the year, plummeted by over 3%. Hong Kong's Hang Seng Index and South Korea's Kospi Index followed suit, each shedding nearly 2% of their value. The bloodbath wasn't confined to Asia. European markets opening later in the day braced for a similar fate. The Euro Stoxx 50, a key index tracking the performance of Eurozone blue-chip companies, was expected to open sharply lower, reflecting the growing unease among European investors. The tariffs, coming at a time when the global economy was already showing signs of fragility, had injected a potent dose of uncertainty into the markets. Investors, spooked by the prospect of a trade war and its attendant economic fallout, were heading for the exits, sending shockwaves through global financial markets. The sudden plunge in stock prices was a visceral manifestation of the fear coursing through the veins of investors worldwide. The tariffs, they feared, were not just an attack on specific countries or industries, but a direct assault on the interconnected global economy that had flourished for decades. The rules of the game, it seemed, had changed overnight, leaving investors scrambling to reassess their positions and adjust to a new, more uncertain reality. The pain was particularly acute for companies with significant exposure to the U.S. market. Toyota, the Japanese automotive giant, saw its shares tumble by over 5% as investors fretted over the impact of tariffs on its U.S. sales. The company, which relies heavily on its North American operations for its profits, was caught in the crossfire of the escalating trade tensions. Samsung Electronics, the South Korean tech behemoth, wasn't spared either. Its shares slumped close to 3% as investors worried about the impact of tariffs on its smartphone and consumer electronics businesses. The company, a global leader in its respective markets, was now facing the prospect of higher costs and reduced demand in its key U.S. market. These corporate giants, symbols of globalized production and interconnected supply chains, were now bearing the brunt of the escalating trade war. Their plight served as a stark reminder of the real-world consequences of protectionist policies, highlighting the interconnectedness of the global economy and the ripple effects of trade disputes. The tariffs drew swift and sharp condemnation from economists and market analysts. Peter Cheer of Academy Securities didn't mince words, calling the move a disaster and expressing shock at the shockingly high level of the new tariffs. His sentiments were echoed by Andrew Brenner of National Alliance Securities, who branded the tariffs ridiculous, accusing the Trump administration of a fundamental lack of understanding of the potential ramifications of their actions, both domestically and internationally. The consensus among experts was clear: the tariffs were a dangerous gamble, a reckless act of economic self-harm with the potential to trigger a global recession. The Trump administration, they argued, had failed to grasp the interconnectedness of the global economy, underestimating the ripple effects of their protectionist policies. The tariffs, they warned, would not only harm U.S. consumers and businesses, but also undermine the very foundations of the global trading system, setting a dangerous precedent for other nations to follow. Section 5. A tariff tsunami, unprecedented levels since 1910. The scale of the new tariffs was truly staggering, pushing the average U.S. tariff rate to levels not seen in over a century. Olu Sonola, an economist at Fitch Ratings, pointed out that the U.S. tariff rate on all imports had skyrocketed to a jaw-dropping 22%, up from a paltry 2.5% just a year earlier in 2024. This dramatic increase, he noted, harkened back to the dark days of protectionism in the early 20th century, with the U.S. tariff rate now reaching levels last seen around 1910. This historical comparison served as a stark warning of the potential dangers of Trump's protectionist policies. The early 20th century was a period marked by trade wars and economic instability, culminating in the Great Depression, a global economic catastrophe that left millions unemployed and impoverished. Section 6. The Shadow of Uncertainty, a global economic freeze. Beyond the immediate market turmoil and the historical parallels, the tariffs cast a long shadow of uncertainty over the global economy. George Goncalves, head of U.S. rates strategy at MUFG Securities Americas, aptly described the prevailing mood as one of paralysis. Investors, consumers, and business leaders alike were frozen in a state of uncertainty, unsure of how to navigate this new, more volatile economic landscape. This pervasive uncertainty, he warned, would inevitably translate into a slowdown in economic activity. The tariffs, Goncalves argued, had introduced a dangerous element of unpredictability into the global economy. Businesses, uncertain about future costs and potential disruptions to their supply chains, would be hesitant to invest and expand. Consumers, faced with the prospect of higher prices and economic instability, would likely tighten their belts, further dampening economic activity. Section 7. Investors brace for impact. Volatility becomes the new norm. As the initial shock of the tariff announcement began to subside, investors were left grappling with a sobering realization: volatility was the new normal. Mandy Xu, an analyst at SIBO Global Markets, noted that investors were now viewing tariffs as a persistent risk factor, a constant threat looming over the global economy. This heightened sense of risk aversion, she warned, would likely translate into sustained market volatility, with investors prone to overreacting to even the slightest hint of bad news. The days of predictable market movements and steady economic growth, it seemed, were over. The tariffs had ushered in a new era of uncertainty, where volatility reigned supreme, and investors were forced to navigate a treacherous landscape of unpredictable policy shifts and escalating trade tensions. Section 8. The looming threat. A global recession? The million-dollar question on everyone's mind was whether the tariffs would be enough to trigger a global recession. While it was still too early to say for sure, the warning signs were flashing red. The International Monetary Fund, in its latest World Economic Outlook report, had already downgraded its global growth forecast for 2025, citing escalating trade tensions as a key risk factor. The tariffs, the IMF warned, could further dampen global trade, disrupt supply chains, and erode business confidence, pushing the world towards a synchronized slowdown. The specter of a global recession loomed large, a stark reminder of the interconnectedness of the global economy and the potential consequences of protectionist policies. The world watched anxiously, hoping that cooler heads would prevail, and that the trade war could be averted before it inflicted irreparable damage on the global economy.
Hey, it's Reviews News here, and guess what's back? Your favorite midweek escape. We're mixing things up. Mondays and Thursdays are now your go-to days for U.S. and global headlines, no boring stuff, we promise. Tech, trends, and WTF moments you need to see. Quick health hacks, because adulting is hard. And yes, still debating if that viral show/movie/game is worth your time. Think of us as your hype crew for staying informed without the snooze fest. Whether you're chilling on the couch or sneaking vids at work, we won't tell. We've got your back. So, subscribe if you haven't. Seriously, do it. Smack the bell. And let's make FOMO your new BFF. New episodes drop Mondays and Thursdays. Let's get smarter and stay entertained. See you in the next one.